All right, I'm back. Welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. Today is Monday, August 26th. Stocks rally for the second week straight. The Dow makes a new record high today. Are we experiencing another sector rotation? Crude oil's up big over tensions in the Middle East. Fed funds futures pricing in a 1 point rate cut. Is that possible? Plus, I sold calls against my BP shares. We'll take a look at our open positions. As you can see, there's a lot to talk about, so let's go ahead and get started. Now, this is your first time here. My name is Mark Hodge. I'm head coach at Rockwell Trading, and today I am going to be running the show by myself. Marcus will be joining us later this week, but I promise you are in good hands. And let's go ahead and let's go right to the charts here. And here I have the S&P 500 up. We see that today, actually a nice little move higher, but pulling back a little bit. The S&P right now down 0.2%, but we have to look at a weekly chart here. After that scare early August, that big reversal week, we still finished the week negative here. But then now two positive weeks in a row. Last week, the S&P up 1.5%. The Dow making a nice move as well, up 1.3% with two winning weeks in a row. And the NASDAQ also finishing higher with a second winning week in a row, up 1.4%. Now today, a little bit of a mixed trading session here. If we look at the 5-minute chart of the S&P, we see that we opened slightly higher and we rallied, but since then we pulled back, we filled the gap down a little bit. It does look like we're coming off of session lows. Right now, the S&P is down 0.2%. The Dow, on the other hand, still positive for the day, and the Dow making a new record high, an intraday record high, that is, hitting 41,420 for the first time. So nice move, still positive. And it looks like the Dow components are doing pretty well. Right now, the NASDAQ tech stocks lagging. So maybe a little bit of a rotation from tech into some good old blue chips and some of the standards and classics there. We'll take a look at the heat map and see where those gains are distributed. But the NASDAQ down 0.8%, while the Dow is up 0.3% right now. Now, you have to look at crude oil here because the crude oil is up over 3% today. And this comes from some geopolitical tension here in the Middle East. There are a few things going on. There are some border issues between Lebanon and Israel with airstrikes, but also Libya having a production halt, which could slow down some supply there. So crude oil future is pushing higher and up 3% for the trading session. Now let's go back here. Let's take a look at a 5-minute chart of the E-mini S&P and just see where we were overnight, because there was a report that came out that was pretty interesting. We saw a little bit of a dip in the Asian session and then a little rally in the European session, flatlining, going nowhere for a couple of hours, and then a little blip right around 8:30 Eastern time before rallying into the U.S. Open. If we look at PowerX Optimizer and we look at the, not asset correlation, let's look at the economic calendar here. We see that looking at the economic calendar, core durable goods and durable goods came out 8:30 a.m. Eastern time. Durable goods up an impressive 9.9% in July. This comes out much stronger than the 4% increase that was expected and much better than the previous reading of minus 6.7%. So huge change there. Durable goods include appliances, aircraft, computers. But if we exclude transportation, which is what core durable goods shows, a small a decrease here. The expectation was that the number would be flat, instead minus 0.2%. So not a big difference there, but this is worse than the previous reading. But that durable goods number, including transportation, definitely standing out with a 9.9% increase in July. Now, while we have the economic calendar here, we might as well look at the rest of the calendar for this week. And we see that a red flag report tomorrow, 10 a.m., 30 minutes after the opening bell, we see consumer confidence. And then on Wednesday, we have a couple of Fed members speaking. Thursday, we have preliminary GDP and unemployment claims. But it's Friday that's going to be the real biggie, core PCE price index. This is the Fed's favorite inflation measure, or the Fed's favorite inflation gauge. This coming out Friday, an hour before U.S. markets open up. So, looking at the economic calendar, this will be a biggie this week. But we could also take a look at the earnings calendar, because earnings season winding down. You could pretty much say it's come to an end, but not quite yet, because we do have a couple of retail earnings this week. But the real biggie, Nvidia. So a rarity here when we look at the earnings calendar and where earnings typically come out. This one coming out late in the season. Nvidia earnings after the bell on Wednesday. That's definitely going to be in the spotlight this week. Something to watch. Can Nvidia continue with its stellar earnings track record? Or is AI and the hype going to be less than well, let's just put it this way: is it a little too hyped? Right? We'll have to see. We'll have to see. We could look at the earnings analysis tool this week, see what Nvidia earnings have done in the past. But for today, we'll just keep it at that. Nvidia, big deal on Wednesday after the bell. A couple of retail companies, Bed Bath and Beyond on Wednesday. We have Salesforce after the bell on Wednesday. CrowdStrike on Wednesday. HP. We also have Dollar General before the opening bell on Thursday. We have Best Buy before the bell. Campbell Soup. So a few Ulta, Lululemon after the bell on Thursday. So it's tail end of retail, but also Nvidia on Wednesday. So Wednesday and Friday, probably the biggest 2 days of the week with Nvidia earnings, and then core PCE on Friday. Now let's go ahead and pull up the stock screener here. Just see, not stock screener. What am I doing? Hey, I've had a couple of days off, so I give myself an excuse here for being a little bit rusty. I got to enjoy a real nice time in the redwoods. We stayed at this neat place called the Bembo Inn, and got to explore the Northern California redwoods. It was just a wonderful time, and I disconnected from trading. I haven't done that for decades, but I did it. And I didn't miss much. It was a perfect week to take off. Here we go. We look at the S&P 500. We look at the heat map, and we see that the Magnificent Seven taking a bit of a hit. Nvidia down 2%, and Microsoft down 0.8%, Apple down 0.9%, Google flat, Meta down 1.7%, Amazon down 0.9%, Tesla down 3.4%. But decent amount of green elsewhere. And then, of course, energy stocks higher for the trading session after that spike in crude oil. But a little more green than you might expect if you look at the S&P 500 and it being down for the day, but a lot of the losses coming from the bigger names and then semiconductors. If we look at NASDAQ looks pretty red. There are some green areas. And then if we look at the Dow 30, the big players, Amazon, Microsoft, and Apple, are negative, but everything else pretty much green. So that's why we see the Dow higher for the trading session, and we see that the S&P down 0.3%, the NASDAQ now down 0.9%. So let's take a look at what is going on with some open position. Actually, before we do that, I want to look at the CME FedWatch tool. Look at this. So right now, there's 100% probability that the Fed will cut rates in September at their September meeting. And this was loosely confirmed by Fed Chair Jerome Powell in his speech from Jackson Hole, Wyoming, where he basically said, we are now ready to cut rates. He didn't say exactly when, he didn't say by how much, but a dovish speech or commentary from the big guy himself, Jerome Powell, and it does look like the Fed is ready. So investors getting excited about that, and that helped with the rally on Friday. Right now, investors are pointing to a quarter point cut rather than a half point cut. That was something that some investors thought might happen, a half point cut after the concerns early in August. And the November meeting right now, chance of a quarter point, maybe a half point cut, which is interesting. But then we also see, look at this, the quarter point cut in November stands out, but then a half point cut in December. So now some analysts are believing that the Fed will cut 3 times or 3 quarters this year. And investors are saying, hey, we think that maybe 4 cuts or 3 cuts with a half in there somewhere at one of these meetings is likely from the Fed. We'll have to see. I've always said that I thought this September meeting is when we'll get a cut. I would still lean towards a quarter cut, but definitely something that's on the table, and investors are getting excited about that, especially if there are more cuts on the way and the economy still remains strong. Right? There are some concerns about the job market, but it does look like inflation is where the Fed expects or wants it to be, and now is the time. So the September meeting, 23 days, 2 hours, 46 minutes, and 37 seconds away. Let's go ahead and move on over to PowerX Optimizer. And let's first take a look at the WTF strategy. No new signals with the filters that we look at. No open positions, which means there are no exits. Nothing to do with the WTF strategy. And because the WTF strategy looks for these high probability oversold conditions in individual stocks, no surprise to me that we don't have any new entries based on where we were trading last week. If we look at wheel position, so BP is a trade that both Marcus and I are in, and this morning BP rallying up to 34.59. I sold BP calls on half of my position. We could go back over to PowerX Optimizer, look at the wheel, and we could go to the calculator here. So if we look at BP, I actually got 27 cents. I'm more than 100 shares, but I keep it at 100 just to keep this simple when working with other traders. Here we see that 27 cents gives me 56% annualized. I took advantage of that when those 34.50s were in the money or at the money. They were in the money to be official. But hey, I love that 34.50 call and the premium there this morning. So I sold calls on half of my position, and we will see what happens this week. So those calls expire on Friday. Moving on to some other open positions. CSIQ, what did you guys do to CSIQ when I was gone? Well, actually, it was all earnings and negative earnings for CSIQ, better than expected revenue. Bouncing back here, though. So I got to give it to CSIQ. Got nasty on Thursday. I have no shame in saying I'm glad I wasn't watching this move. I was enjoying the redwoods. Maybe eating a nice breakfast at the time. But yeah, bouncing back on Friday. Right now, a little more follow through, 2.8%. Haven't quite gotten back to Wednesday's close, but this recovery after the nasty slide on Thursday, I'll take that. Now, Halliburton up for the day, pulling back from where it opened. It got as high as 32.45. I was watching this one, looking to potentially sell calls at 34.50. Not enough premium for my plan. Getting that 30% annualized on the call side, it was not available there. It was available at the 33, not quite at 34, 35, 450. So I'm watching this one. We have this range here after that early drop in August, and bouncing back, coming back a little bit, breaking through these highs, but right now giving back most of today's gains, up 0.2%. Coles, Marcus still has a position in Coles. We do have earnings coming out this week. Earnings for Coles on Wednesday. So we'll see where Coles wants to move on Wednesday. and Marcus was able to sell calls at the 2150 strike for half of his shares. I think that came on Friday. Merck, we had some traders today selling calls on Merck, getting a sign between 118 and 120. Merck getting as high as 117.90 today, pulling back a little bit, still positive for the trading session, but coming off of session highs. UPS just plugging along. I drew a nice arrow here in our mastermind call. This is technical charting 102, more advanced charting where you learn to draw arrows on your charts. It helps out. Real traders draw arrows. So we did it in our mastermind call this morning, just assisting UPS and pointing the way, the direction, where to go from here. And right now, UPS 129.29, up 1%. I'll take that. We just need, after this earnings reaction here, kind of a price reset in range. Just need to see UPS break outside of this upper range here and fill this gap. That is the plan. And for now, I'll take that 1% gain. So these are the open positions that I have, and also the ones that Marcus has. No new WTF trades. And it could be an interesting week. Again, Wednesday and Friday, the biggies here. Wednesday being NVIDIA's earnings, and Friday being core PCE and that inflation reading. Now, this is the moment that you either dread, love, or just simply appreciate. And so I'm reading the book of The Life of Henry Ford. Do you know what type of book it is? It's an autobiography. And with that said, I hope you liked this video. I hope you liked our Coffee with Marcus and Mark's, but today just Mark. And if you did, please give the video a thumbs up. If you're new to the channel, please subscribe. If you know someone who could benefit from these videos, please share it. And hey, we enjoy your feedback. We enjoy your comments. Great to be back, and looking forward to another great trading day tomorrow. Until then, happy trading, everybody.